Hello everyone, today is Friday, September 4th, 2020. My name is Evan and welcome back to our weekly stock market analysis video. If you're new here, welcome. We break our analysis into two parts. In part one, we're going to review everything that went on this week in markets, and it was a busy week out there. We're going to look at performance sectors, volatility, really pick apart everything that stands out and highlight everything that's interesting. In part two, we're going to jump into the charts, put everything from part one into context. We'll look at some longer term trends and really just try and make some sense of everything and point out some opportunities looking into next week. So hopefully that sounds good to you. We've got lots to cover in today's video. So let's dive right in with just some of the headlines, the takeaways from this week. It was the largest pullback that we've seen across the broad indices since bottoming out in March. So basically, as I like to kind of refer to it as the recovery rally after the first quarter, this was the largest pullback we've seen now from high to the low of today or on Friday's session. It was also the highest volume week in pretty much lots of individual stocks and those indices since March. But really, after those two things start to fizzle out, and we had a big jump in the VIX and there was lots of movement, we essentially, the punchline here is gave back anywhere from 10 to 15 days worth of upside movement. So that's kind of where it fits into the bigger picture. We're going to talk a lot more about all of these things in just a moment's time. So let's look at the performance on the week here, the right-hand column for all of the major equity indices. You can see everything was down about 2 to 3%. The Nasdaq 100 was down 3.12%. That was the largest, the underperformer at the lows on Friday. This was a much bigger number, closer to 6 or a little over 6% down at the lows of today, but we did see a recovery. And you can see international stocks as well getting hit, but actually faring relatively decent on a relative basis. If we take a look at market internals here, this is where things start to get interesting, and I want to spend some time on the next couple of slides here. So we usually look at these two stats here, which is the NYSE net 52-week highs minus lows and the NYSE cumulative AD line. Those two in combination can give you a pretty good sense of what's going on. There are, other measures, of course, like percentage of stocks above moving averages, and there's lots of ways to sort of slice and dice market breadth. But these are sort of our favorites, and we like to look at the total numbers here on the week. And basically, we can see on the week that we still had a very large positive number here for the number of stocks hitting new 52-week highs. It tapered off on Thursday, but even after Thursday's sell-off, we still had more stocks making new highs than new lows. And on Friday, now this number is very unsettled. It's and I mean that in the sense of it's not a final number. At the time of recording this, it takes the exchanges a few hours to really kind of finalize and get some of these data finalized. So this might change. I don't know if we're actually in negative territory on Friday, but I think the takeaway here is that we still had a pretty strongly positive week. And I put together this chart here of the cumulative 52-week highs minus lows over the past 30 trading days. And basically what you can see is we've had just this nice, strong, and steady, accumulation of 52-week highs in this market. And, this, speaks to the strength that has been out there and that we've been able to enjoy for the past 4 to 5 months or so, is because we've seen an expansion of stocks hitting new 52-week highs and making progress to the upside. Now, what you'll notice though is if we look here at the past couple of days, we're starting to flatten out here. And this is where I think things are going to get interesting, is as we start to measure the mood of the market, the temperament of the market after this week's action. This is a critical chart that I'll be paying attention to, because if this starts to slope down and starts to go the other way and starts to decline on a regular day after day basis, that is going to be a more intermediate to longer term sort of point of concern for this market. Now, we're not there yet. We're still, in fact, arguably we could still be making marginal advances here to the upside. It depends on how this number comes in on Friday, but this is a good kind of inflection area to kind of take a pulse on in a chart that I think is pretty important. If we look at the cumulative advancers minus decliners here, there really hasn't been a strong trend in place like 52-week highs. You can see, again, taking the past 30 days worth of trading, you can see we had this nice surge to the upside, then it started to taper off here. And I think what you're seeing here is just that big mega cap market heavy leadership type of Nasdaq 100 leading stocks that we've seen. The majority, the average, the Russell hasn't necessarily been advancing as strong as some of those mega cap leaders, and I think that's what this shows you here. So both of these charts, I think, looking at kind of the the trends over the past couple of weeks and seeing how they come into play over and throughout the month of September, I think is going to be interesting for you intermediate to longer term traders. We're going to talk all about the specific price action in part 2 of this video, but I do want to just get through some of what I consider to be important market statistics to pay attention to. So those are two things to keep an eye on. Again, I think the silver lining here is that we still had net positive net advancers on the week, so that is very constructive, but we do want to see if this starts to become in jeopardy coming into the next couple of weeks. Now, if we look at sector performance, you can see we had only 2 sectors on the week closing green. We had materials and utilities, both up about 0.5% or so on the week. Everything else was down. Energy was the bottom of the list here, 4.25%, closely followed by technology and consumer services, down 4% and 3% respectively. So pretty much almost a blanket negative net week across sectors. Now, volatility exploded to the upside this week, and it certainly did come and trail off a little bit into the closing print of the day. We didn't get a VIX above 35 or to hold the intraday levels, but it still is above 30, and that is, again, a very high historical VIX. And the longer it stays above 30, again, I talked about this in yesterday's video. We can link up that video now if you didn't watch it. We did sort of a special report yesterday on some of the market, the Nasdaq in turmoil, as I think it was called. And we discussed the fact that the 30 VIX, I think, would be a good kind of line in the sand to pay attention to. We'll talk about that in part 2 of this video as well. But, basically what this chart is showing you here is that we just saw the VIX jump right across the curve here, especially though the front month is really what jumped up here. And you can see we're not quite in backwardation or anything like that yet, but the 30 VIX up here, 34 for the 3-month, definitely an elevated, risky sort of measure. Now, credit markets, I think, were actually interesting this week because we didn't actually get any other stress that at least these particular proxies are letting on. So in other words, the credit market, the bond market, isn't saying that we're in a great deal of stress or panic yet, even though we saw high cap tech stocks really sell off and saw some good rotation there, some liquidation there. It's really doesn't seem at this point to be indicative of a bigger problem. We'll continue to keep an eye on it, but I'd actually say this is pretty constructive here for this week's sell-off. And if we look at just interest rates and commodities generally here, you can see rates didn't really change a whole lot. Basically, bonds were pretty much up on the long end of the curve. In the short end, there was a little bit of the opposite there. And you can see gold and silver were down. Crude oil got hit pretty hard today, actually, or this week, down 7% on the week. So when you kind of take everything in perspective here, the report card really just not much good to point out, and that should be kind of clear and evident based on how this week ended up. Market breadth was still a positive, and quite frankly, the credit markets here was just right on the line. It just barely got this X instead of a check mark here. So really, when I think about kind of two things that are pretty important, market breadth and credit stress, both of those things for the most part held up, and I think that is mildly constructive, even though we do sort of get a D given some of these other factors. Now, final slide here on some of the Merlin strategy positioning right now. Not a whole lot changed for us after this week. Remember, this is a longer term, trying to anticipate 1, 2, 3 months out. We did get some stop outs in the portfolio. We did get some exits on Friday, but the majority of the positioning here is still pretty much intact. It is still pretty tech heavy, although some of that tech exposure did get reduced, and still a decent amount of healthcare or biotech exposure in the portfolio right now, with some consumer staples and financials. So that's sort of the roundabout there. Let's pause now. We'll come back in just a moment here with part 2. We're going to look at charts and lots of price action for this week's trading. All right, we're back here. We've got TC 2000 open, and I want to start off with this roadmap right here. We talked about this chart in yesterday's video. Again, if you didn't watch yesterday's video, you can link it up. We kind of really just discussed everything from a short-term to a longer-term perspective of what was going on in the market and what to expect going forward. I still think a lot of what we discussed yesterday is relevant, and we're going to really just build upon it today. But this roadmap is what we initially looked at in yesterday's video. This is the Nasdaq 100. I've hidden price itself, and I've just drawn on these little lines here, which represent the pullbacks that we've seen in the market since the March lows, basically on this recovery rally to the upside. And we have 9 pullbacks here of anywhere from about 5% up to 10.6%. So at the lows of today's session with the Qs, we fell 10.66% off of the all-time highs just made, several days ago. So that's sort of where we're at here. It's now the biggest pullback in this recovery. All of the others have been in that 5 to 7% range. Take a look at the volume that came in here as well with this sell-off. Much different than lots of these other points here. This is the heaviest volume that we've seen in the Nasdaq 100 since the March sell-off, and in fact it rivals even quite frankly, Friday's session here almost took out the heaviest down volume on February. So we were definitely seeing some flow here and some shares trading hands and some new participants that haven't been necessarily along in this market on the upside, certainly changing hands over the past couple of days. So I think that's an interesting spot to start. Let's dial it back though and kind of go back to our equity market grid where we like to start our weekly recaps here. And what you're looking at right now is price itself is the white dashed lines across all of these charts, and we have a custom price and volume based indicator here that measures trend and strength of trend direction, and so we have that applied. It's called our Smart Trend Filter Indicator, and this helps us just really get a very easy, simple way to understand what's going on. And one of the things I want to start as the takeaway here is that on the weekly time frame, we're looking at a weekly chart and all these charts right now, the weekly time frame is completely uninterrupted of its bullish direction here on all of these charts. So no trend change direction or even anything under pressure right now on the longer term time frame. And we spent a lot of time in yesterday's video sort of breaking apart this price action based on your time frame, because time frame really does matter. And if you're a short-term trader, this obviously is way too long for you. If you're a long-term trader, you don't necessarily care about the 1 and 2 day events. And so we like to try and bridge this analysis and kind of always talk with an association to a time frame. So weekly chart, nothing changed. Daily chart, we're under pressure here in all of the markets. S&P's under pressure, Nasdaq's under pressure, Russell's under pressure, ACWX, which is international, is under pressure. Notice though, none of them transition down to a bearish trend or a sell signal for this particular model. And this represents a daily chart. It's looking back at, approximately a month's worth of trading or so, and that's how it's getting its figures here for price and volume. The Nasdaq, which certainly got all the talk this week, you can see is just now undercutting our trend filter. So it'll be interesting to see how this action gets followed up next week. For now, though, we still have a bullish to neutral outlook here on the daily chart for all of these assets. Now, let's get a little closer look. Let's look at some of the price action. And we're going to start it off with the S&P 500. There's a lot of lines on this chart. Let's put our plot back on there and switch over to this view right here. So this view is our sort of roadmap that we've been looking at for the S&P 500. The last time we discussed this chart here was on Tuesday of this week, which was this session right here. Back on Tuesday, we talked about the fact that participation was sort of expanding, and we were seeing other markets, not just the Nasdaq, continuing to lead to the upside. We did say that chase is on in terms of these markets and that risks were opening up. We had no idea that risks would be opening up this quickly and this abruptly, but we certainly got some risk here just several days later. And what we saw was the S&P 500 see this big negative session down here on Thursday, down 3.5%. And on Friday, at the lows, it was down another 3%, but it didn't close at the lows. We saw a nice bounce off of these lower levels down here. And this is an important technical spot, this 3,400 or so. This was a good line in the sand to use for the S&P 500. This is the level we talked about on Tuesday as being the relevant intermediate term level. This was the all-time high breakout for the S&P 500. So to keep the S&P 500 kind of acting as healthy and bullish as possible, we would want to see this market continue to hold above 3,400. That is a good critical spot in my eyes for near-term supply and demand. And again, it was the prior highs from February of this year, and it was the recent breakout. So you can see on first test, we absolutely undercut it on today's session, but the cavalry arrived, buyers stepped up or sellers dried up, and the market bounced and closed over 3,400. So that in the short term is a constructive piece of data, of evidence going into the weekend that at least the market didn't completely roll over and go out into the weekend at the dead lows with two very big, ugly candles. So that in the very short term is a line in the sand to now pay attention to. You can certainly refine these levels, and for you shorter term traders, you want to be paying attention now to the lows here on Friday, as those mark a reasonable spot to pay attention to in the next several days. So 3,350 to 3,400, I think this is your band in here that you really want to see the market stay above to, again, continue to keep that momentum and uptrend in place. As it stands, the S&P 500 would have pulled back about 6.65% if the lows hold here from Friday. So one of the things we talked about as well in yesterday's video was watching the VIX. And watching the VIX around this 30 level, I think, is an important key kind of psychological level to pay attention to for this particular market. A 30 VIX, or staying above a 30 VIX, in my eyes says that we have a different character market than we have had in the past couple of weeks. And I know that can sound very obvious, but basically here I'm saying that you should mentally be preparing for increased ranges and more volatility in markets over the next week or two if we're going to continue to hold over 30 in the VIX. So the VIX is just another way to get some evidence and confirmation about what's going on in the market. Right now it's elevated. It pulled back into the weekend. That is constructive. Again, we didn't close above 35 or even close to 40, so that is encouraging. But we want to see this continue to sort of waterfall lower if we're going to get back to those, good time rally markets like we saw, over the past couple of months. So the VIX, I think, would be an interesting thing to continue to pay attention to. If we final up here with our S&P 500 chart, I would be using this as the line in the sand on the downside. We talked about another technique in yesterday's video, and we were using the Qs, but basically saying like, this session right here on Thursday, this is what we call a day to take notice. This is when something big, different happens in the market, and we had a range expansion to the downside on the heaviest volume we've seen in months. That's a day to take notice, and one way to relieve some headaches if you're a short-term trader, if you want to sort of opt out of any potential volatility that could go on for the next couple of days or even weeks, is to just use the highs of that bar as your kind of signal line to get back involved in the market. In other words, if we can start to rally back over 35.65, then you have reason to believe that all of this, whatever the market's freaking out about here, this near-term panic is over, and maybe we're back to resuming the uptrend to the upside. So that's another way to look at it, is the 35.60, which is basically the highs here, or you can, always use, if you want to use a little bit of a tighter strategy, you could always try and get a rally above a prior day's highs. That's always good to see it stick and to start looking like things can start working higher. So that's the S&P 500, 3350, all the way back up to 35, I'll call it 3,600 is kind of the range there. If we look at the Russell 2000, you can see again, this held right at an interesting spot. I mean, we've had these levels drawn on the chart now for some time. It's been the sideways channel that the Russell 2000 has been in. It clearly broke below it today, and arguably it did close below or at the very bottom of this range. But this is going to be an interesting spot to see it hold, because, at the end of the day, if that was the extent of the selling, then, and buyers can step back in here at the lower end of the Russell range, then this looks pretty interesting for a move back up into this range, and then you could be looking at a breakout in no time. It's too early to say that. I'm not saying that is the path that things are going right now, but that's a scenario here if these lows do in fact hold. So for the Russell, that's the range. It's pretty clear technically. Again, all these markets behaving very well and clean on a technical perspective. Russell 2000 has been the underperforming index. Didn't quite underperform as much though this week. The Nasdaq is the one that did that. So let's get to the Nasdaq here. And let's look at, so we talked about, we did our NASDAQ roadmap. So we know we've had about a 10% from high to low pullback. And if we go to this chart here, actually, I think it was this level here. This is the level I use, or this is the chart we annotated yesterday. And this was the circle I drew yesterday on a good spot for the market to hold. I didn't think we would get down here in just one other day's time. I figured, at least 3 to 4 more days. But here we are, and if I just draw this circle over to the left, this was, the approximate spot where I figured would be a good, reasonable spot for that tactical bounce to occur. That's what we discussed yesterday as tactical opportunity zone, and you can see we basically got right in there. We in fact, proceeded to sell off a little bit further, and then we got this nice bounce back over, and what we've effectively got was a test of and a challenge of the lower end of this channel that's been in place for 4 months, and also this sideways last breakout level around 274.50. So both of those were effectively retested on Friday. They held and they bounced, and the Nasdaq closed well off of its lows. So the $1 million question now, looking ahead, is can it continue to hold above this zone? So these dip buys kind of only work on that first attempt, or at least that's the safest way to play them. The fact if we roll back over to this area here, we're definitely going to want to see it hold. But that's, that really is going to be the test, is can the market stay above this zone? Can we, stabilize here, work ourselves sideways, hold above 274 or even 267, I guess would be the lower band. And that would, again, keep this market acting as healthy and as strong as possible without causing too much technical damage. So the Nasdaq, again, behaving very well technically, has bounced nicely, and now heading into next week, we're going to see how this gets followed up. The contextual part about this sell-off here is that obviously, you know, we have this very loud 2 days worth of selling, but again, when we sort of zoom out here and we just look at where price was all but 12 days ago, it's right back where we tested on today's lows. So as violent and as extreme and as quick as this risk happened and this move happened to the downside, it ultimately only erased about 2 weeks worth of trading. So as the saying goes, the very technical saying goes, easy come, easy go. That's kind of what you're seeing here. We were very much on this parade to the upside, getting frothy, and now you're just seeing a very quick knee-jerk reaction, resetting a lot of that froth. And now we're going to, you know, pay attention to see if basically on a longer-term basis, if the volatility is here to stay, or if in fact this is the extent of the sell-off. So that, I think, really sort of wraps up. Looking over at a couple of notes I jotted down because there's a lot I wanted to talk about. You know, the VIX we talked about, the high volume we talked about. We looked at our roadmap, the lower bounds sort of held here. The last actual comment here I wanted to make on price action is that, you know, one thing that happens after a move like this is it does rattle confidence. I think it rattles confidence sometimes on both sides, you know, shorts and longs. And what can easily develop from periods like this are just simply trading ranges to you know, to the side here where price doesn't necessarily go anywhere. Maybe the range looks something like this, or maybe we do make one more move down to, you know, the 265s or the you know, lower end here to around 256. That would approximately give you, you know, about a 16, 17, 18% pullback off of the all-time highs if it gets back down to here. And maybe then the market just kind of chops around and it just goes sideways here for the next couple of months before the year end. And that's certainly a possibility here as we just move sideways, kind of frustrate the majority, and you know, just kind of dismiss both bull and strong bear kind of moves from this point out. So that's just another scenario to keep in mind. We're of course going to monitor this every single day. That's what we do in these videos. We take one day at a time because that's all you can do, and just use, you know, kind of prepare with the best information you have, given what the market throws at us. So that, I think, covers all of the market sort of discussion there on the major indices. If we're to go to some of the other markets here, investment grade bond, junk bonds, still both in weekly uptrends. TLT still kind of flirting here and on neutral mode. If we go down to the daily chart for the VIX, you can see that we did print a buy signal here, or a move up signal for the VIX on Wednesday. And that move, of course, accelerated pretty strong here on Thursday, and then it started to taper off on Friday. So we do have, again, a buy signal now on volatility. That is near-term bearish, and what you'd want to see is the price, again, roll back over and move back down and start trending lower. It's kind of a theme that we talked about earlier, so that's something to pay attention to. You can see TLT tried to get back above its trend here, and it started to roll back over, but it is printing neutral right now for the near term. If we look at commodities, top left, gold still on a buy signal, silver still on a buy signal. These are the long-term views. If we go into a daily chart, gold is sideways and a little bit suspect right here, printing a bearish sell signal. Silver still neutral to positive. And bottom left is oil and bottom right is commodities, both printing their first sell signal in quite some time. So, you know, if we zoom back here, oil's been in a buy signal since May. Commodities have been in a buy signal since May as well. So both of those starting to roll over a bit now. Be interesting to see how that plays out. But you've certainly got some volatility to the downside there in both of those trends that have been acting very well. If we go to the sector analysis, you know, really not a whole lot changed from a weekly perspective. The trends and the outlooks here all pretty much stayed the same. If we go down to a daily chart, you're getting, you know, you basically have one sector that is in bearish trend, and that's energy. If we look here at biotech, it's neutral. If we look at healthcare, it's neutral. Financials is neutral. Industrials is neutral. There's a lot that just went neutral, but only one right now is printing, which is energy, which is printing an actual bear sell signal. And you can see the volume that's coming in here as this starts to come back to the July lows and is kind of threatening the rollover here. So this is an interesting one to watch. It's down about 5 days in a row, so it's kind of extended lower, but certainly not in a great position. Technology, XLK, is finally getting, again, a little bit of selling pressure here for its long grind to the upside. This is going to resemble what the Qs look like, but basically, you know, you can see heavy volume and starting to get under pressure, but still holding the overall uptrend. So that, I think, covers you know, at least the majority of what I wanted to mention or talk about today. There is you know, inevitably I probably forget a few different facts I wanted to point out, but time frame matters in times like these, and I just want to again hammer that home because you know, that's just important when you're debating analysis on social or with anyone or your own self. Just make sure you know what time frame you're looking at, because that makes all the difference. And right now, I think in the short term, you're getting regime changes and changes of character. In the longer term, things haven't quite changed a whole lot just yet. So you got to know where you live and, of course, follow and stick to those plans. So that is it for me. What did you guys notice? Is there something I left out? Is there something that you find interesting? I'd love to hear it below. Leave a comment. Gladly, I always read them all and try and respond to them. So hopefully this video was helpful. Enjoy the long weekend. I forgot to totally mention that it was a long weekend at the top of this video. Markets are closed on Monday, so you get some well-deserved rest, and hopefully you get some time away from the screens. Thanks as always for tuning in and watching. You can subscribe to our YouTube channel or follow us at The Trade Risk. Have a great weekend. We'll see you back here next week.